This is the Southside School of Financial Freedom Watch List and Market Report for the week ending May 20th, 2023. Our question this week is, what is Don't Fight the Fed? The answer will be provided later in the video. This week, the market ended higher. The Dow Jones Industrial Average decreased minus 0.33% on Friday, but was up 0.38% for the week. The S&P 500 decreased minus 0.14% on Friday, but was up 1.65% for the week. The Nasdaq decreased minus 0.24% on Friday, but was up 3.04% for the week. Looking at the week, we can see that there were 9 up finishes versus 6 down finishes for the major indexes. On Monday, Wednesday, and Thursday, all the major indexes finished up. On Tuesday and Friday, they all finished down. New unemployment claims were 242,000. Consumer debt passed $17 trillion. Retail sales rose 0.4% in April. April existing home sales fell 3.4%. Home builder sentiment rose 5 points to 50 in May, and Republicans walked out of the debt ceiling talks. New unemployment claims, consumer debt passing $17 trillion, retail sales rising 0.4% in April, existing home sales falling, home builder sentiment rising, and Republicans walking out of the debt ceiling talks are all news, and news drives the market. Good and bad, day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is Don't Fight the Fed? Don't Fight the Fed is a well-known investment edict. That means investors shouldn't bet against the Fed's monetary policy. The Federal Reserve has the power to increase and decrease the U.S. money supply. The Fed's ability to set U.S. monetary policy gives them enormous power over the U.S. economy. Businesses and individuals are influenced by the Fed's monetary decisions. Thus, if the Fed is tightening, that is, reducing the money supply, investors should not invest in risk assets like certain stocks. Conversely, when the Fed is loosening or expanding the money supply, the economy is likely to expand because corporations tend to make more investments that tend to make more money, and stock prices are likely to go up. In short, investors should align their investment choices with the Fed's monetary policy. Do you align your investments with the Fed's monetary policy? Is the Fed tightening or loosening the money supply right now? Does the Fed's monetary policy affect your stocks? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor, and they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside Strategy. You can learn more about the Southside Trading Strategy at southsideschoolofinancialfreedom.com. Here is the Southside Trading Watch List from the week ending May 20th, 2023. The strongest performer on the list this week was Snap Incorporated, ticker symbol SNAP, in the third column. It was up 0.31% on Friday and increased 13.68% for the week. Snap Incorporated is a technology company whose flagship project is Snapchat, a visual messaging app that has various tabs like camera, visual messaging, Snap Map, stories, and Spotlight that enables people to communicate visually through short videos and images. The company also has an eyewear product called Spectacles that connects with Snapchat and captures photos and video from a human perspective. Looking at a summary of results, you can see that Snap has increased 8.6% year to date. I did not trade or generate cash flow from Snap this week. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comment section. Are you willing to share your strategy? The Southside Portfolio Cash Flow System is outperforming the S&P 500 ETF SPY. The Southside Portfolio is up 27.55% versus 9.46% up for SPY, a difference of 18.09%. The Southside is beating SPY by over 18%. The cash flow generated by the Southside Cash Flow System for this week was 1.79% of the portfolio account value. The account value changed by 4.7%. Meanwhile, the S&P 500 ETF SPY changed by 1.71%. Bitcoin Watch. Bitcoin gained 0.41% this past week and still appears to be on the verge of a bull market, though it is down almost 61% from its all-time high, which was achieved in November 2021. It is up more than 62% year to date. I sold option contracts on one position this week. It was a call that ranged from $0.00 to $43.34. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschoolofinancialfreedom.com. In order to increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are arranged in playlists levels 1, 2, and 3. They are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.